Hello everybody. First things first is going to be a quick video lesson as we have no new long positions, no new short positions, no sells, no covers on an end of day trend following basis. So we can focus on the market. Today the NASDAQ was up 0.35%. Big reversal off the intraday highs, basically giving this a clear churning session. We're stuck between the recent lows and the February 1st high, so technically we are in a range-bound market, but sub-intermediate term, we're in a downtrend. Intermediate term, we're in a downtrend. And long term, we're basically going nowhere to being in a downtrend. This is an extremely ugly chart going back to 2014. Just all these V-shaped moves are just absolutely nasty. And while some people think that we might crash to new lows, I don't see how, if we do hit new lows, how we're not going to snap back and rally. We're so far extended from the 200-day moving average and 50-day moving average. It's kind of unrealistic to expect us just to keep on selling off. But the bottom line is, today was not a good session. The S&P 500, similar situation. Big intraday reversal. Appears to be churning. Volume was slightly lower than the day before, but it was still about average, so it wasn't like it was well below average in that distribution or sellings leaving this market. Still pretty bad. We're range bound, trapped between the January 20th lows, February 1st highs. So as long as we're trapped in between there, I don't suggest really, having a strong, hardcore, short-term bullish or bearish posture. I'd be fluid here, but based on the way individual stocks look and the indexes look and the sub-intermediate, intermediate, and long-term trends, I don't see why anybody would think that we're actually going to find the lows and bounce here, especially whenever the VIX is at a nice 26. Now, I know that's elevated from recent levels, but do you see where it was back in August? We're nowhere near there, and if you want to go back out to whenever we found some real lows in 2008, we were nowhere near those levels. So it's kind of comical that everybody thinks that, oh yeah, we bottomed here. It's kind of, it's entertaining at least. The Russell 2000, similar situation. Intraday, it broke to new lows on February 8th. So technically this rally attempt is dead in the stock market, technically, because all the indexes need to hold above their previous lows for a rally attempt to be true. With the Russell 2000 failing it, that wipes everything clean and clear with me. Our models are been under an operational sell signal since the end of December. And if we go ahead and move on to the Dow Jones Transportation Average, we've been under an operational sell signal since the end of May back here. And it has not changed since. It didn't go neutral here. It didn't go neutral there. It's still under a sell signal. The only short-term potential good news for the market is that the Dow Jones Transportation Average is starting to show some relative strength compared to the overall market. It's been uptrending since the January 20th lows. It's actually been building higher highs and higher lows the entire way. So it's possible that if we are looking at a bottom, we have our first hint of some positive divergence out there as we want to see the Dow Jones Transportation Average lead. Unfortunately, the Russell 2000 isn't confirming it. So I wouldn't take this bounce too seriously. I'd take it with a grain of salt. And considering that the bounce is coming with basically distribution within the bounce, here, there, and not quite today, but that's not a good intraday reversal, and that we're still under the 50-200-day moving average, it's silly to get too excited here. So overall, operational sell signals are in effect. We don't see much reason for a bounce on our end, none of us at Big Wave Trading. The best stock that we have, and it's still a perfect speculator. First off, these are the only three stocks. BMA, that is not a good looking chart. I'm sorry, that is not a good cut pattern. There's distribution in the base, no accumulation. Not sure how people like that. And FSLR is still in there, and as you can see, it has, iffy looking consolidation pattern. And then there's JBSS, and I like tighter price charts, so I'm going to go ahead and go back to what I like, even though nobody else likes it. This is what I like to look at, though, tight price patterns. But JBSS is still technically building a solid cup pattern here and handle. So we've got a cup and handle pattern forming. The volume on the right side of the cup is right, and right now the volume pattern in the handle is good. The down days are on lower volume, and this one up day is on higher volume. And BOP is still steadily growing. It's not as a popular indicator with me anymore, but I still like to see a lot of green. And as long as that's trending up, it's all good. I mean, that goes to two long positions that we have, LITE. You can see how the BOP looks at that, and AMSC. You can see how the BOP looks on that one. So those are basically two of like only a handful of longs that we have. And as you notice, they're actually green. And JBSS could easily be a new long if it breaks out above that handle high. So we've got that on watch. But besides that, most of these stocks, that's why we're not going to be shocked if FSLR and BMA turn out remember FSLR, BMA, if they turn out like ELII did, not good. And then I noticed EEFT today. EEFT absolutely imploded 15% on huge volume. Told you that the right side of that cup pattern did not look right. And as you can see, this is what it turned out. It just didn't turn out well, I guess you could say. And then also LABL at one point was a perfect speculator quality stock back in October. You see how that's reacting now. So high quality names, they're just getting, destroyed, and even certain high beta names like SCTY. And then LinkedIn, notice there's been no bounce since that gap down in LinkedIn. Data, a small bounce, but not much following that sell-off. And it just goes to show how weak this market is. And when stocks trade like this, and your best stocks are basically gold stocks, so gold still looks good. Food stocks like Post and BGS, ooh, exciting. And the defense-related stocks like HII, aerospace and defense, it's not really a strong market. It's utilities, basically, utilities. It's gold, and it's defensive-related stocks like aerospace and defense. Cigarette stocks, Philip Morris, overall, Altria Group, Reynolds, they're holding up pretty well. But besides that, this is not a good market. This is not a healthy market. I'm not sure why we're so complacent at these new lows, but I don't think that's a good thing. And I keep seeing bottom callers out there, which is just very odd to me, considering what the NASDAQ alone looks like, much less the S&P 500 and the Russell 2000. It just seems it's really silly to be calling a bottom here. So we remain under a very heavy cash position. We recommend new traders stay very cash heavy. We're only looking for intraday day trades in low price, low flow, possible pre-market or even intraday runners. The number one stock that we have our eye on is VHC. I flagged it yesterday. It probably should have been a new short on my end. Intraday, I had a perfect short opportunity, but I was not around. It faded perfectly from the intraday breakdown. And now, technically, it's an end-of-day short signal, and it still can be if it opens up around 682. So it's an overnight end-of-day trend following potential short signal. There's shares to borrow at Interactive Brokers. Last time I checked, there was over 300,000. It looks like it's ready to roll over. Unfortunately, this evening, on my desktop, I have my charts open, and I'm looking at it right now. VHC is at 668, so it's gapping below 682, so there's no way I would chase any position here. It needs to rally back up to 682, so I'll be watching this intraday in the morning for potential morning spike. Hopefully, if it does gap down even, for it to hit resistance around 682 so I can go short. But unfortunately, the real breakdown, as I'm looking at my chart here, intraday was today, and I missed it because I was gone. But what are you going to do? I have to live a life. I live on Maui. I'm not on East Coast time. Maybe in the future I'll be back to the East Coast. But for now, I have to deal with Maui hours. It is what it is.